Good morning, everyone. Today is Friday, November 10th, and what a roller coaster the market took us for a ride yesterday. So yesterday, and let's see why that happened, and I have my economic calendar on the screen. This is Market Watch, and as you can see, the Fed Chairman Jerome Powell spoke at 2 p.m., and as I always say, number one, always start your day looking at the economic calendar to see if there are going to be any announcements that are going to move the market or might tend to move the market. And principal among those is an FOMC announcement or when the Fed chairman speaks. So that's what happened yesterday, and let's see what that did to the market. Now, yesterday, here was my chart, 3-minute chart of the S&P, and I had my resistance set out at 44.11. and the support at 43.79, and that, of course, is from my Taylor calculator, 44.11 and 43.79, 43.80. Those were the numbers from yesterday, and so that's what I had on my chart, and together with the previous close from Wednesday. So as you can see, the market started off right at the resistance point at the of the calculations, and quickly closed the gap for a nice trade down, let's see, 44.11 down to 43.97, so about 15 points, not too shabby. The market then gyrated. Of course, you have to know the targets, and of course the targets are set by the Taylor trading resistance and support levels, the range of the Taylor trading zone, and the previous day's close. So as far as yesterday, the market actually respected the support level of the calculations at 43.80, actually twice, but then based on Chairman Powell's words right here at 2 p.m., you see my cursor is right at the 2 p.m. mark, the market fell out of bed because of the Chairman Powell's words, which said, Powell says Fed is not confident and has done enough to bring inflation down. And as a result, the CME Tool, and this is a CME Tool, which is a projection or an estimation of what the interest rates are going to be according to the upcoming Federal Reserve actions. And so the probability, right now the target rate is 525, 550, and the next meeting is December 13th, and the market was 99% certain that it was going to maintain this, but now it's 90% certain, and then 9.5%, almost 10% certain that the market is going to be affected because the Federal Reserve is looking to raise interest rates to 550 to 575, another 25 basis points. So if that happens, of course, well, the market overreacted yesterday. So let's go back to the chart. The market overreacted yesterday at 2 p.m. Otherwise, it's pretty certain that the Taylor trading zone would have given us a reliable forecast that the market respected. And so after 2 p.m. and after the Federal Reserve Chairman spoke, all bets were off. So let's see what's going to happen today. Well, going back to the Taylor calculator, and for those of you who don't have the Taylor calculator is based on the calculations of George Taylor back in the 1950s that measures the movements of markets from highs to lows to highs, lows to lows, and lows to highs. So it's basically how the market moves up and down within a range. And the calculations are an average of averages. There are 12 calculations that go into it. And I provide these numbers through a calculator that you can purchase on my site at timelessdollar.com, in addition to my trading courses. But nevertheless, this is a very, very powerful tool. And I think that everyone should, if you don't have it, give a second thought to purchasing it. It's not expensive, and you can use it for any market. Nevertheless, today the calculations show that the resistance is at 44.03 and support down at 43.59. The market looks like, and it's about an hour before the market is set to open, it looks like the market is right now it's trading a bit over the equilibrium. Equilibrium is always the close of the day. Why? Because that's the point where the buyers and sellers generally agree that prices are fair. Fair to buyers, fair to sellers. During the day, the market gyrates wildly, but basically, at the end of the day, that's where buyers and sellers agree that prices are fair for each side of the transaction. But of course, we're looking for the intraday moves. And so using the Taylor calculator and watching price action, of course, being, and for example, where the market opened yesterday at 44.11 and then traded down to 43.97 to pick up a 15-point gap trade, nice 15 points. For those of you who are trading the E-mini, that's $750. And that happened, let's see, that happened 10 minutes after the market opened, within 10 minutes. So if you're not happy with that, and forget about the rest of the day, if you're not happy with that, I can't help you. But nevertheless, that is a very nice trade in just 10 minutes time. So other than that, the Taylor calculator is going to give you the area where the market is likely to trade. And those of you who've seen my previous videos know that the range is also an important aspect of the calculator. So let's see what happens today. Here's what my chart again looks like for today, Friday, November 10th. The market, of course, is closed for Veterans Day, but Veterans Day falls on a Saturday this year, tomorrow, so the market is open today. And so we will see what happens today. Thanks so much for watching. Trade safely, use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.